Okay, recording started. Sorry about that. Forgot to hit the record button. We're about 2 minutes into this. No big economic reports coming out today. Canadian CPI was at 8:30, and a member of the FOMC does speak at 1. Just be aware of it. I'm going through CL first because I was looking at some opportunities on the long side. Definitely weak on the daily, 240. Let's see what happens here. I have a 3-minute here with some nice levels on it, but we got about a 4-tick zone on here. Let's go down. Let's work our way down. No, this is too much. This is too much confusion for me. When it was just one big zone, I was happy. Now it's turning into one there and one there. As I go down on tick frames, let me at least just want to keep an eye on it. As far as the ticks I like, I mean, I think you can tell I'm using the Fibonacci. If you don't know Fibonacci's, maybe we'll do a special webinar on that. I use it just in concert for the way I trade. I do like the Fibonacci numbers for tick numbers. You could definitely do round numbers if you want. A lot of people will do 500, 1,000, 2,000, 10,000, whatever it is. But I do like using the Fibonacci numbers. You can go 144, 233, 377. Now the 144, 233, that's very low. That's the equivalent of using a 1-minute, 2-minute chart. So just be aware of that. I have a scalp strategy. I use the 144 on where the reason really even to do it is that you can get the risk so small. It's like within $20, $25 per contract on. I only use it on the Dow. I've used it on Aussie dollar too. But really the idea with that is just you're risking 25 to make 50, and let's say you have 2 contracts on, your goal is to make $100 a day. It's a fairly safe. The problem is you got to take a decent number of trades, and I don't know. I might do an advanced class on it because it's a very good strategy. But to get the really good winners on it, you have to. There's like a second tier to it. I will go as low as a 377. I mean, it's not going to look all that different. Let me just go to it. I'll show it to you. 77 TFCK. All right, so it didn't change much. It will make some of the levels look less attractive. Yeah, I start with the 1597 and maybe go 987 and then 610. 610 is one I found probably the most consistency with. I like to line up a 610 tick chart with, or actually any of the tick charts. If I can line it up with a time chart, I do like that it gives it a little bit of confluence. With most traders using time charts, does give it a little bit extra. All right, so I'm not getting anywhere near my entries on that one. So let's get out of here and go over to YM. Oh, you know what? Let me just do this way. I should start with the daily. All right, so we're headed back down into this tested zone here. Origin, first hit. Oh, that was actually a near miss. Look at that. Interesting. Still, I'm going to take this all as one and being tested, so I don't expect that to hold. All right, so now I'm going to go to. I like this guy right here. If price can make its way there. No, just it's a mess down below. So that's a nice short level if we get there, but look for something a little closer. Kind of messy. A lot of candles, and the move away isn't exactly great. It did lead to this. Yeah, I don't really think there's a trade there. Let me go to 15. No, that just looks like a mess on the 15. Didn't resolve into anything. Look at that. Alright, so it's 9:40, we're about 10 minutes in. Didn't see much of anything that I liked, so I'm just gonna keep looking around, see if I find anything, and then we'll move on to some of the other stuff. I'm gonna look. Oh, a lot of little levels on here. See? Now which one to take? That move away is not great. That move away is not great. This isn't bad. Alright, so you see the difference? Remember in a drop base drop, if you're a coaching student of mine, remember what's the most important part of a drop base drop? Not the first drop, but the last drop. So drop, a base, nice drop away. Drop, base, drop, okay drop away. And then it gets worse as it goes down, so that's why we're not going to really look to trade these. Just going to put it in blue. But we might look at these. Yeah, I don't have anything closer. This is that entire 60-minute level. I like that guy on the 10-minute. Again, we have to get there. Market's not moving gangbusters or anything like that, or too volatile right now. But like I said, it's only 10 minutes in. Let's wait and see. This happened yesterday, and then the sell-off happened in the afternoon. So the market started quiet in the morning and then finished. It was, moving all over the place. Oh wait, might have something. Wait a second here. Damn. So there's about 20 ticks of risk in there. 247 and 63, so 63 points of juice. Let's see if I can. I'm trying to get this to resolve into something I want to see. No, I'll take it on the 5, but I mean, I don't love it. There's my ticks. Alright, so we got a possible trade waiting on the YM. I'm trying to get it to lay out the way I want it to look. I just got to find it on the time frame or tick frame. And I'm looking for some confluence because it's kind of a big zone for a 5-minute. 1597 is kind of like an intermediate. You can sometimes make it line up with like a 10 or a 15. Wow, place the lines. Let's see. Not perfect. Not perfect. I may take a stab at it with one contract. There it is on the S&P. They trade largely in concert. Certain differences, like this, I like this level here. I like the long wick to the downside. I like to sell off there. Looks like it's bouncing off of a tiny zone in here. If that breaks, that'll help the trade. No, I'm just looking for my opportunities. I know what I want to look for, and when I don't see it, I have to either take pause or make mistakes, to be honest with you. So it's another thing I'm trying to avoid. But I do like this YM setup, and I do like that it's set up on the S&P as well. I don't like that it's in the middle of the move, but no, I brought up the option chain for something else. I was like, we were looking at a trade yesterday, and it was really, it wasn't great for an options play because it just wasn't that liquid and it had high spreads. But hold on, now I'm just trying to figure out what I want to do here. Hold on, I'm pausing the screen for 1 second. All right, that trade hit. I set it up too late. Literally, as I was setting it up, it hit. I gotta cancel. It's already down 26. You son of a bitch. All right. All right, so I didn't take that. It was 10 ticks away when I paused it, and I set it up so that way I could do it privately, and it looks like it's going okay right now. Well, it's headed back in there. This wick touch. Notice how it just wick touched in there. That's really good. When it headed in, it rolled in for like 3 ticks, came out about 20 at one point. It was, I think, 17,280. Headed back up now. The close outside the zone is good. Well, if this closes outside the zone. But like I said, it is heading back up there now. But that initial 20-tick move right off of it, not thrilled when it gets 1-to-1 and then goes back into the zone. So we're going to see what happens here. I'm not willing to take it right now. My target, I'm going to use that purple line. Give me a second here and I'll give you more info on that. All right, so maybe I'll get out even a little bit sooner, 275. That would give me 25 ticks of profit. Yeah, I don't know. We'll do a whole thing on fibs one day. Yeah. I use it just to enhance what I'm doing. I don't really use it just to get into it. It doesn't make or break my trade, but it's information. So if I know price is going to reverse at the 38.2, why not get out a little bit before where my exit's going to be? Now, I was only buying one contract on this because it's kind of wide. $100 on one contract of the YM, it's kind of near my average, but not what I like to see. Now, if you really want to... Sorry, it's my dog. Hang on, guys. Sorry about that. And there is my target. Wonderful. Could have actually taken it that second time. When I get. Anyway, if any of you took it, great. See how it's getting stronger at the 38.2. We'll see. My thesis was there's really nothing to hold this up in this vicinity. I'm not even going to go too far back, but if you see, even if you call this demand right here, I mean, speed up, like hit, deeper. So if I go further, just white space. Oh, here we go. So you could call, oh, that's tested too. So there's no real closest thing to fresh zone would be right there. Hey. Let's see if it breaks. The 38.2, like I said, was where I was going to get out. About 25 ticks. It's about $125. If I had a second contract, sorry about that. If I had a second contract, I would have got out my first contract at 38.2, and my second contract I would just leave alone. So like right now, I wouldn't be doing anything. If this is all going to break down, My second target would be like 17,224. 66 ticks. So we approach 10 o'clock. I was hoping to see fall right into one of my zones here on CL, but not quite. All right, so we started the morning with one good. Oh, this is the S&P. Oh, sorry, I switched my charts. Yeah, no, I would expect if you took this. Did you take this? Huh. Okay, cool. No, whatever. That's fine. Looks like it went right there and then it's headed back up. This would make me sweat a little bit. Came off hit here, went into this zone, coming back down. This is tested. I'm hoping it just makes its run back here and then falls. I'm not in this trade either, but just as far as analysis, I'd prefer to be short anyway. But it is making its way back upstairs. Yeah, I don't like that, but we'll see. I was not doing much of anything. All right, now over to stocks. This stock setup we had yesterday, it was up about 40 cents and then tanked on the open this morning. So this is one we were setting up with Frank yesterday. Spreads actually weren't too bad, but it still wasn't, wasn't an ideal options trade. Some stuff I was setting up yesterday might be looking to set up today. Getting there. If you can see the handouts, this is in there for me yesterday. So we were looking to set something up, but Frank wanted it to get a little closer. Hopefully we're going to get that today. It's about 70 cents away. So this could be a good setup to, I want to say he's going to say, but I'm not going to pretend to understand what Frank's going to say, actually. Let me hold my, I think I was looking at a 15-minute over here. Yeah. That was small. I mean, buying puts in that is going to be tough on a 15-minute chart. 60 and a nice size zone, we can work with it, but then that's 20, 25 cent zone. I mean, not ideal. All right. Well, I am still holding steady and propping and shorts. All right, let's see. This is getting interesting. If it starts to get down here now. No, I don't like to be confused, and a lot of times you'll get confluence with different charts. And now that yellow box is a nice looking zone on a 987, but on the 1597, this is the zone right here. So now I got to make a decision, and it's better when the less thinking you have to do. The more you have to force a trade, the less likely it is to work out. Let me see if I resolve this into something. 3613. Look at all those boxes I have here. see if I get this 20. See when it gets closer. All right, now it's broken. Back playing with that 38.2. Let's see if it can just get down. Like I said, this is a tested zone from before. Just beat to hell. So this should keep falling. Let's see if I'm right. Come on down. I'm working from home today. Now, someone asked why is it so quiet, and normally you have the squawk in the back, you have the guy yelling, me talking to somebody, the whole 9 yards. I worked from home yesterday and today. I'm headed into the office to do a coaching session. At some point, I'm going to try and get out of here and either leave the room vacant for a little while, maybe closer to 11, so I can get there to help Frank set up. This is coming down. Frank's going to do options at 11:30, so I'm going to start setting up stock setups in a little bit. Here we go. Come on down. No, normally we have the squawk on, the squawk box from the CME. We have CNBC on. It's just there. It's noise. It doesn't bother me. I actually don't so much like the quiet. I mean, if my kids were here right now, it'd be a little different. But you know. All right, decision time. Let's see what we're going to do here. All right. I think I'm going to set this guy up right here. I'm getting it along 36.11. Make sure I put the right contract in the major. Oh, okay, we're good.
order filled.
Come on. Oh, I forgot I have 2 boxes for that. Yeah, I'm sorry, I missed this one question. Yeah, when Frank gets here at 11:30, any specific option questions, I can answer it, but I mean, I think you're better off waiting for Frank. Yeah, that trade didn't have tight bid-ask spreads. It wasn't bad, but an Apple or Facebook, you would have got more money off of it. There's a lot of more things you can do with more liquid stock. That like ESV was just, it's a $15 stock and it only had monthlies, all that kind of good stuff. Yesterday, if that move happened on that was Facebook, we probably could have taken that trade off yesterday. So. Go check on the YM. Facebook, sorry. Oh. Target 2 on that one. target 2. I mean, staying above the zone, but I really needed to not gather the strength I want.
Order filled.
Mount 1. $31. 31 is my current target. I'm looking to get out around this vicinity, basically. Just not showing me what I wanted to show me. Let's see here. I mean, everything's kind of beat up ahead of time. Remember, like I was saying on the one. Hold on, I'll get a little deeper into it, into like lesson style in 1 second. Let's just see. It's playing with like 5-6 ticks. You see, it's making this initial move out. I'm just worried about sweating the next part of it if it has to come back down and then go back up. Well, the idea is to capture some profit 1-to-1. Second contract, you leave go 2, 3-to-1, whatever it is. Whatever it is, your goal. Come on, let's see here.
Order filled.
Nope. Damn it, that wasn't fast enough. You see, I should have turned this fucking thing, those alerts off. Son of a bitch. No, okay, so here's what I was trying to get at. Oh, hold on, let me read some of the questions, because alright. Here was my thesis, right? That when price got into here, right, this was my overall target, 36.31. So I'm risking 9 ticks to make 21, just a little bit better than 2 to 1, right? Now, a little bit more advanced, but up here, up above, notice all this noise. There's nothing here to stop this trade. So there's a short right there. So I'm just reverse engineering what I did. Touched, broke, broke. So the only, and not even good stuff, would be right there. So I'm expecting this to break into the 36.52 area. So I was trying to be conservative while also, you know, letting that contract run. But I see everything about this is really balanced, right? You have to be, if the two overarching emotions are fear and greed, can't let one overwhelm the other. But here's the thing. I did not want to lose on the trade, obviously, right? So I took a little bit of heat. I just took 2 contracts. It wasn't a huge trade. But I got out one at 1 to 1. So, all right, so now the trade is good. Now the most I can lose on this trade, no, if I make 100 and I still have my stop at 100, it's a break-even trade if it stops me out on the second contract. I left the second contract to be a runner, and I was trying to see if I could get it a little deeper into the zone, which I did. My original target of 31, I think I actually made it like 35 or something like that, or 36. Hold on, let me look at my phone. It's right here. 36 was my exact exit. So I got 11. So I got 25 ticks on the second contract and 10 ticks on the first. All right. Alrighty. That made up for missing that YM trade that turned out awesome. One contract. At 36.21. Alright, I'm going to take a break and make some coffee when I'm done with this. And it's still going. Son of a bitch. Yeah, it was a really good trade. I mean, I'm glad I took it. I'm glad it wasn't, you know, look, the trade went well. I could have lost 200. I made 350. So I didn't get a full 2 to 1 on the whole position, but I was a little scared on just its initial move down. So, hey, it happens. Let's see if it actually is turning at that little short area I was looking at. Right there. And I don't like this area, just an area. Like, I wouldn't go short from it, but it was where that ultimate next exit would be. Yep, turning right there. 52. That would have been 41 ticks, $410. For a grand total of a $510 trade. Wow. All right. So, out. No. Well, you could have. I've done it before where I've stayed in trades too long, too. Where I was trying to do the exact same thing, and it just, you know, I would have been better off just getting out. So, all in all, Not too shabby. Alright. Let's see how that YM trade's doing. Alright. So just for a review, this second line, same system. I didn't take this trade, and I was pretty specific about it. I wish I had, but came in, came out. I was going to get out one contract at the 38.2 Fibonacci and leave a second runner. This whole blue area is tested to shit. So I expected price to hit this second target would have been right here, 17,224. So that would have been 76 ticks. So out at one, conservative, second one, boom. For a very nice trade on the Dow, and the same setup on the S&P actually. Sorry, that's my workspaces are all left up on my laptop. See, here's entry, tested demand, came like a knife through butter next time it came in there. So another good trade, but the only trade I took myself was this one. No, you don't take it again. No, I don't care if it heads back down there and how big it went. I never take a second bite at the apple. Alrighty. So if there's no more questions about this trade, I'm going to take like a little break. I'm going to make some coffee. And I'm going to come back in here. I'm going to do some stock stuff for options for later on. Oh man, this is hitting me out. I'll send you guys tomorrow. I think I still have to send tomorrow. Yesterday's video. Frank was using some of this Facebook stuff to do it, but it just touched now. Ah, damn. Anyway, I'm going to leave my screen up. I'm just going to mute myself. Feel free to put any questions in or anything you want to talk about, too. It's Friday. Let's chit-chat. I'm going to do some stock setups, like I said, for Frank. And this is one we were looking at yesterday, but just hit today. So stick with me. And I'll be back in 5-10 minutes. All right, guys, I'm back. Well, this continued higher, and wow. Hold on. Yeah, I mean, as far as look, you take the trade, you made money. Don't look at this chart anymore. But you could just keep moving your target. I mean, it's too difficult. It's too difficult. You got to be out of the trade. I mean, unless you did it so wide, like 37, which would have been great. Don't get me wrong. Making $1,000 on one or almost $1,000 on one contract. Trust me, I'd like to do that. But no. Like this second move back, I'm sure I would have moved my stop to, at least up here. At least guarantee 100 on that or something like that. So, can't go broke taking a profit. Let me get into Facebook. Facebook hit the 240-minute long level. Posted in handout. Yesterday. All right, now let's go on to Apple. Nothing really to get along from on Apple. Let's see. Oh, I know what I'm looking for. That's right. Okay, so this is heading. See, damn it. Yesterday I found some place to go long on Apple. Let's just do 90 days back. Let me just add some more. Come on. What the hell? Come on. $107. What is with my data? Load, damn it. What the hell? Anyway, I put a 60-minute level in the handouts yesterday. I'm having trouble getting loading more data. I don't know why. It's these two green lines, 107.01 for the entry, 106.26 for the stop. If you want to take a stock setup, great. But we were really looking to either do a spread or just buy long calls. So we'll see. And then we got a little short setup right there. Yeah, I can widen this out. Hold on. Let me get this out of the S&P. All right. So we got Facebook in the middle of the zone right now. Apple's approaching it. Let's look at FLX. I'm going to see if... Yeah, Frank's supposed to come in at 11:30. So I'm going to see if I can get him in here earlier because that Apple setup is sweet. There's Netflix. Let's see here. All right, nothing there on that one. All right, guys. Frank's actually going to start a little bit earlier because we have we're approaching some grid levels on a lot of different stocks, and getting there earlier. I mean, it's not 100% necessary to be. You can be a little bit later with stocks than you can, with options than you would be with futures. If you bought the stock, you'd need to be on time. With the options, maybe you have a little bit of time for it. So that's why I'm going to see if Frank can come in here a little sooner and start getting a setup, because that's about $1 away on Apple. And we're in Netflix zone. This one already started, but we got that gap to fill. So we got some opportunities here. So he'll be here in a couple minutes. But I'll alert everybody else who's not here that he's coming. All right, I am going to pause the screen for 1 second so I can start emailing some people, just letting them know that Frank's on his way. But I'll be here. So you can keep posting questions. All right, Frank, hang on. Give me a second. I'm just alerting people that we're going to start a little bit early on your segment and that we're recording, but I just want to let them know and give them another shot. So bear with me for another minute here, Frank. And then I'm going to go through some stuff. Frank, if you're listening and you want to get ready, I was looking at something on Facebook. It just hit a little while ago from yesterday, and Apple is approaching it. The entry was 107. I'm just banging out an email to everybody. Frank, I just turned your mic on if you're there, if you want to test it out.
Testing 1 2 3 4 1 2 3 4. Can you hear me?
I can hear you.
Very good, sir.
All right. Sorry to rush you in here, but like I said, some good stuff.
No. I'd rather do that one. Yeah, it sounds like it.
All right. Give me 1 second. I'm going to give you my... All right. Let's see my screen. And let's get at it. You want me to go over the setups first and then turn it over to you?
Yeah, go ahead. I did the handouts, but if you got live charts ready to go, you can start.
Sure. Yeah. One of them is the Facebook. Let's start with Facebook because it's in the zone right now.
Absolutely.
All right. This is one of the handouts, the Facebook 241. Oh man. I don't know. You tell me if it's too late. You see what happened? It touched that. Hold on 1 second.
No, I think it's still okay, but go ahead.
It should still have some room. You'll see. I mean, I had this in the video before you got here.
Oh, wait a minute. I'm sorry.
105.34, and it probably has room to get above 10. If it has room to get above 108, that would be my conservative first exit, and then 110 would be the ultimate exit, where I just bail.
Where is it? You know what? I was wrong. I thought it was still down in your zone, in your yellow. Yeah. So it popped up already.
It's up over $1 already, yeah.
I'm late to the party. There's still a decent amount of upside. Question is, are you late to the party? Do you still want to do the trade?
Yeah.
I'll pick an option. Son of a gun. Yeah, we're late to the party.
I knew this was going to be a good zone. That's why I texted you. It was in the zone when I texted you, it didn't really pop out at all.
Okay. I could still go to work on it. You want to do a quickie on it? I'll do a quick recommendation.
Why not?
Yeah. No spread. We'll just go in with long calls again, okay?
All right.
So
you want me to give you the floor?
Excuse me?
You want me to make you the presenter so you can see we can see your screen?
Yes, please.
All right. Hang on 1 second. Yes. All right.
Okay, my sound's okay. It's acceptable.
Sounds okay. Yep. And I can see your screen, so you're good to go.
Okay. All right. So with Facebook right now, 106.33. Would you say 108 your first target?
Hold on. Let me get back to
108-ish.
108 is my first target. Yeah.
Okay. So because I got $1.66-ish here on the upside, I would still, even though late to the party, that's okay. You have more confirmation. But you're going to have to set your stop. You know, we'll talk about that when we tee up some of the option strikes. Let's just get this up here. Yeah, I like the upside too. Okay, one other thing. Let's go to the option chain. Now, one can handle this two different ways. As you can see, we were looking at the 110 call yesterday. Well, that's not it. There's no freaking way. Sorry for my French. There's no way you would buy this option. I don't remember what the price was yesterday. It's definitely up. We can't use this. A lot of times you hear me say we can use a far out of the money and it'll suffice because, you know, it has a week to go, so we buy it on Monday and sell it at the end of the day Monday. Even though it doesn't come close to the strike price, it still makes money. Well, in today's situation, that's not the case, right? Today we do have to say, well, gosh, if I buy a 110 call and this thing goes up, like Ryan says, to 108, the 110 call is not going to fly here because it does expire today, okay? So again, I say it every time, I say it a million times, what you do on Monday is different what you do on Friday, and et cetera, et cetera, et cetera. So the answers that we have are not set in stone. It always depends on where we are in the expiration cycle. So if you wanted to use an option for this week on a day trade, you could use the in the money. Let me get my time value screen here so you can see what I'm talking about. All right, but the 105, you got $1.45. You got it's in the money by $1.48. You got $1.45 of time value. That's too much wood to lay. So I would not use any of these calls that expire today. Okay, yesterday, Thursday, and a Friday, you could have took a nip, but not now, not today. So I'm taking that off the board. Okay. And even though you might want to take this trade just for today or wrap it into next week, still use next week's option, okay? And you know what? All right, let's get this right. Here's what I'm talking about. Look at the 110 calls. There isn't even a bid and ask on that, okay? So why would we want to use that option? Why would we buy it? So looking over here, I'll use next week's. And here we go again. It's right in front of us. I would use the 110 call. Look at the cost. Now because it expires next Friday, and I'll put it into the risk graph and make my point visually, okay? So we're going to buy, I'm using 10 as my example, as I always do. You don't have to buy 10. You can buy 20. You can buy 50. You can buy 5. That's personal, okay? Again, the 110 call for next week, and we don't need it to go to 110. Let's follow Ryan's lead, buy the 110 call for about 25 cents, and let it go up. Let's go with what we know. Look at the delta, right? The speedometer, all right? So if we bought this 110 call that expires next week for 25 cents right now, and this thing went up to 108, you're looking at about $1.50 gain. So that's about 37 cents. So that would be over 100% return. Gets the job done. Okay. So if those looking to go who haven't gone long on, well, I shouldn't say long, those who did not put on a bullish strategy on Facebook, it's still open. It's still doable. You missed the 1 point rise, but there's still room for it to go up about $1.50 and maybe even continue up to 10. But let's let it get to 108 first and then make the decision on the 110, right? It's got to go to 108 first. So looking at the delta here, I was looking at the wrong, so 16 cents is the delta. So this thing would go up about 25 cents, not 37. Something changed here. So yeah, if this thing goes to 108, this option will double its value. So a $250 investment on a 10 lot will become $500. And all you need is this thing to go to 108. Okay? All right, Ryan, what else do you got?
All right.
You said it on Apple?
We got Apple. If you look at the handouts from yesterday, it's the Apple 60-minute.
Were they the ones that are into the handout room now?
Yeah, they're in there. Apple
Okay.
60 minutes, the second one. That's the chart. That's the chart before entry that you just went to. That's very nice. All right. That's the one we're looking at now for Apple.
Is this what you want?
Yep. It's at 108.10. It's about buck 10 away.
All right. You know, for whatever reason, oh, here it is. Okay. It's at 108.10 right now?
Yep.
So it's in this little...
No. It's the 107.01 would be my entry if I was taking the stock.
What's this for?
I think it was probably an old trade of mine, but the one we want to focus on now, because it's through that, or playing with that, is the 107. That's the good zone.
Okay. All right. So we're about $1 away.
Yep.
Okay. So again, we don't know I can anticipate, but I don't want to spend a lot of time on it. We don't know what the option prices will be, but we can pick our strike and get a ballpark as to what the cost will be. All right. So if we're going to get bullish here, I might do I don't want to, if this triggered now, I would put on a spread trade. But because it's $1 away, I really don't, it's too, the numbers aren't set. In other words, too much unknown. So I'm going to go with a long call again on this Facebook. Okay. And then we'll talk about a spread if and when it gets there. Not Facebook, Apple. Okay. So with Apple, all right, here's the spread from yesterday I'll take this out. 1, 2, okay. All right, so with this at 108, the trigger's 107, okay? So all these option prices that we're looking at here are based on Apple at 108.20. But that's not Ryan's trigger. Ryan's trigger is 107 and change, right?
Yep.
So with that, I need to take a point off of Apple, and that'll help me forecast and have more certainty as to what these prices will be, okay, and deltas, et cetera, et cetera. So let me go with this here, and if it goes to 107, I'm looking above it, of course, so I'll be looking at around 109, maybe 110. You know what, let's take these off the board because we're not even considering these, so I'll just scoot that over. And here's the options that we're looking for, okay? Now again, if you want to turn this, if you buy these calls and it goes to 108 and it lays up sideways and you really think it has a good chance of going to 110, that's fine. But don't hold this week's option here into expiration. If it pops to 108 either today's fine, even Monday's fine, you can stick with it. But later Monday, if you're profitable on the trade and it's a 108 but you don't want to take it down because you think it's going to go to 110, and just roll that winning call out to the following week, okay? And you're in position to profit from 108 to 110. And you're taking profits on your original trade. All good business, okay? So I'm looking at now again, these prices are based on 108.13. When it comes down to 107 and change, the 110s will probably be going for more like 48 cents, all right? So I'm going to say do the 110 calls, but not yet. On the trigger, buy the 110 calls. Okay? You should be able to get them for around a half a point, 45 cents around there. Okay? If your bankroll is limited, the 111 call will work. You'll get that for 29 cents, around that. Okay? What am I doing? I'm just shifting the pricing here, taking a point off of Apple, telling you what they'll be worth. Okay? You're not buying them now, and these prices are not what you'd pay. Okay? So again, this is if it triggers today or later today. If this don't trigger till Tuesday, well, prices will be lower, right? Because there'll be less time. So the recommendation is either a 110 call or a 111 call. Okay? So I'm just going to put this in here now. This is not the time to trade it. I'm just putting it in here now so that when I come back to this screen, it'll be in here. Okay? But even though I'm putting it in for 110, the 110 or the 111 will suffice. And the performance will be pretty much the same as far as the return on investment. Might be 5 or 6% different, which is close enough. Okay? All right, Rai. A spread. If this thing goes to 107 and triggers, and I want to get bullish, another trade. Well, before I go to the other trade on the spread here, again, this is based on Apple's prices now, so we're not going to get the right information out of it, so I'm not going to go there. Let's go with the spread that I want to use. If someone wants to use a credit spread or a debit spread, I'll use a credit spread. If this thing goes to 107 and I'm bullish, I'll look to sell. Let me look at Ryan's chart again, and then I'll look at my chart.
The 107 entry, Frank.
Yeah, but okay, but I'm just skimming over. All right, so here's where it's going to trigger. I really don't have anything holding it up, as I say. So I would go, and I would definitely stick to Ryan's stop here, even if you buy the calls. See, but if you spend just 25 cents on the calls, your protection's already built into the trade, right? If you enter and this thing goes from 117.01 on your entry down here to 106 and a quarter, 106.28. If it goes down there, well, you already have someone who buys the underlying. Yeah, they got to get out because they can lose a lot of money should it keep going down. All right. Well, we've already addressed that. Why do you think I recommended you buy the 110 call for 25 cents? Or 30 cents, right? Because if this thing does drop, what if it drops fast through that zone? Well, you already have your protection built into the trade. That's a luxury that we have as option strategists. It's a beautiful thing, okay? So I really wouldn't worry about a stop here. But like I said, the point is, if it goes down here with my spread trade, now it does become more important. Because on my spread, I'm investing more than 25 cents, and I could lose more from 106.28 down to 105, okay? And I don't see anything strong really in here holding this up. Maybe this here at 105, it's not real strong to me. No. I'll honor it, I'll use it, but it's not real heavy, so definitely on my spread. So let me give you a spread trade. This thing triggers at 107. I will go with that's why I'm looking here.
Yeah.
I might go with a 105, 106 put credit spread. I might go 106, 105. Let's look at the prices. I'll probably give you two different ideas here. All right, so let's take this out, and I'll show you. Again, I'm using the prices that are reflective of 108, not 107. So, but I think you'll get the idea. So let's do 107. I'm going to go 107 right to the T and show you the difference, okay? And I don't need deltas on this. I'll go with this one here. Oh, man. I just blew it. I changed all of my... I clicked on that M by accident. Son of a gun. And now the 3 is the 1. See? I have a... Oh, man. All right, well, we'll go with this. Time premium's on here, so... Oh, boy. That's why I hate clutter. I clicked the wrong button. Anyway, all right, let's come down here. Let's compare the credits. If we go 107, 106, selling those, we're buying these. The break-evens will be different if we did this at 107 than it is now at 108. But it'll be close. You get an idea. All right, here's the credit. 30 cents, 300 on a 10 lot. So you're risking 70 cents to make 30 cents. Different ball game. It's a spread. But what's the trade-off? When you buy calls, you're risking 25 cents on the call to make more, right? You can only lose 25 cents. Well, here, it doesn't sound as good, right? I'm risking 70 cents to make 30, which is still close to almost a 50% return. Not bad, right? But the most importantly is, what am I getting for that? What am I getting for a different risk reward? I'm getting an edge, and here's the edge. So we can take this trade at 107, and the break even on this is so damn small. Option View used to put the break even over here, right under this, and now it's a small number. And I actually need a magnifying glass to see it, I'm embarrassed to say. But I'll just look here. I'll just go here. And you know what? I apologize. There's something wrong with this risk graph. So I got to do it manually. This risk graph is not reflecting the trade. There's something wrong here. I got to call Option View. See, that's what I mean. And this is a good lesson. Knowing what you're doing, I'm going to do it manually, and I'll tell you the break even. Understanding how a vertical spread works. Well, I just clicked on Option View, and it's telling me that this trade can't win. Where's the profit? I don't see it anywhere. Can't win. But it's wrong. There is something wrong with this. So you're telling me if Ryan's right and Apple goes to 112, this trade's going to break even at expiration? I don't think so. If I'm selling puts, I don't think so. Matter of fact, I know so. Okay? So this is wrong. I apologize. That's a glitch in Option View. The risk graph on the calls was correct. The risk graph on my calendar spread was correct. So I don't know if it's Apple or just the Apple options or whatever, but not your problem. We have to, but I can't use it. So here's the deal. If we sell the 107, 106 calendar, if we sell that for a credit now, it's 32 cents. I'll call it 30 cents. The break even, that thing needs to go down to 106.70 for us to lose, all right? So that's only a 30-cent edge, really. If you enter this trade, you see what I'm saying? So here's what I'm going to do. I want to change it to the 106, 105. Question on that, though, might be the premium might be a lot smaller. I'm going to get a better edge, okay? And I might not like this at all. Oh, and you know, again, the other thing, these prices, these credit spreads are lower. Why? Because Apple's at 107.90. I need Apple to come down 90 cents. And then these puts will have more juice in them. So you see what I'm doing, Rye? I'm doing the work on a trade, but I'm using false numbers. But you see what I'm saying? So why don't we just do this? I'll just give you the break even to make my point. If we go 106, 105, I'll use the 105, 104 as my guide. I don't want to confuse anybody. I probably already did. I'm thinking about 10 things at once right now. I'm doing calculations and everything. Yeah, the 106, 105 really would be equivalent to a 105, 104 when this thing comes down 83 cents. So here's what I'll do. Go with a 106, 105. Your credit, let me put that one in here. This is the trade. So at least you know the strike's going in if this thing triggers and I'm not on the air. Okay? So I'll guide you this way. And you know this keyboard's working today. The risk graph isn't working, but the keyboard's working. You know, when I enter the quantities. All right, so here, look at the credit on this. I'm telling you that if this thing goes to 107, Ryan's trigger, this credit would be more like Let's see here. Pretty much the same, actually. No, I take that back. It'll be more like, yeah, pretty much the same. So we'll leave that there. I don't know what the credit's going to be when Apple slides down, if and when down to 107. Figure on around 30 cents, okay? 30 cents. So with that, 30 cents, the break even would be take the 30 cents off the 106. Now let's look at Ryan's chart, okay? See, now that works better. That actually mimics what Ryan drew here. There's the play. My vertical spread, 106, 105 put, credit spread, will mimic exactly what Ryan's doing here. So here, let's go from the beginning. Apple comes down to 107.01, sell the 106, 105 put credit spread for next week's expiration, credit of about 30 cents, okay?
Frank, let me repeat that. We're going to do the 106, 105 expiring December 25th, and we're going to sell it for 30 cents. So 300 on a 10 line.
It'll be about 30 cents at that time, yes. And here's the good part. The break even on it will be 105.70. How about that?
That's pretty good because then my zone, it's below my zone. So this trade is wrong. Stop out the stock trader a little bit and then do what it's got to do.
You just read my mind. You nailed it. Now we still might use Ryan's stop. I'll use it as an alert because we still have more room to be wrong, right? I mean, they can go through Ryan's stop and keep going, so we got to pay attention. But we do have a little more room to be wrong and could still win. And here's another bonus on the credit spread. Next week is Christmas, so really it's expiration Thursday, which is Christmas Eve, and I believe the market's closing early on Christmas Eve.
I think it closes at 1.
There you go. So you got a whole day and a half of not having to manage this thing. Instead of Friday at 4 o'clock, now it's Thursday at 1 o'clock. That's huge. I just need this thing to stay above 107 into next Thursday if you're going to take it all the way. But that's not the play here. The play is for this thing to go back up to 108 after it goes to 107, right? 108, 110, okay? So those are the things that we can do in the middle of this trade. So I love it. Definitely, you notice yesterday we didn't do a vertical. Again, it depends. It depends. This is a great vertical spread setup, and you're taking advantage of the short week. Time is on your side. You're positive theta, not negative theta when you sell this spread. So you definitely want expiration to come quicker. Because what if this thing traded sideways and it didn't go up? Well, now you do want to go to the finish line and you want it to time decay, okay? So a good trade, watch Apple. Where's it at now, Ryan? Is it down there yet?
Not yet. It's kind of just playing around. We're heading to 11:30. Volume's trying to trail. If it hits while we're on the air, I will obviously let everybody know.
Absolutely. I'll go right to it because then we'll know the prices and we'll see if it's going to be a 30-cent credit. You know what? If it goes down a little bit, volatility can go up a little bit. It could be 33 cents. It might be 35. I wouldn't take the trade if it was a dime. Not worth it.
Yeah.
So I'd say 20 cents and above. It's a good trade. Now, again, 30 cents. Oh, my God. That's not a lot of money. Oh, it's not? Well, if you're investing 70 cents to make 30 cents, that's almost 50% in one day. Or for a weekend? Are you kidding me? And if it's not enough money, juice up the contracts. Do 100 contracts. It's Apple. Do 50, okay? But like I said, if you're new to this, do a 10 lot. Learn the business. You know, get your feet on the ground.
Hey, Frank, tell somebody new to do one contract. Watch something double from $25 to $50, and you'll be doing this all the time.
Oh, yeah, that's still the first trade.
Yeah.
Buy the call. Buy one call for 25 cents, absolutely.
25 bucks, yeah.
When you're in the option arena, take everything single unit so you can appreciate. You know, if I told you, hey, guess what, Ryan made 25 cents on his trade today, ha, 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 you'd be like, a big deal. Oh, wait a minute, no. Ryan doubled his money on his trade today.
Ooh,
same trade, same thing. Understand the whole deal. All right, I'm good with that. Anything else you want to look at?
Yeah, we got Netflix, but I got someone who wants to ask a question. You prefer to talk. Is that cool with you?
Oh, I didn't know we could do that. I would love it, and I do want to do Netflix after that because I trade Netflix.
All right, he has a question about Apple, and it's Milton Chin. He's the guy we were trying to remount for selling naked calls, if you remember.
Oh, what? I just seen him. What? I just seen him 2 nights ago, I think.
Oh, did you? All right,
Is
hold on.
that
I'm
the
going to
same?
unmute Milton. Get ready. I'm going to unmute you. So if you're
Oh wait. In other words, I can't talk. He can only talk. Him and I can't talk together.
you're going to have an interchange, but don't forget you both are going to try talking over each other. So let's see how this works.
Oh yeah.
All right, hang on, Milton.
Hello, can you hear me?
I can hear you, Frank. Can you hear Milton?
I can hear him. I want to know which Milton this is, though. I need to find that out first.
Frank, this is Milton that you and I met at the Stock Twits, or we were last seen together at the Stock Twits list last Wednesday?
2 nights ago.
Correct.
That's the Milton I was hoping it was going to be.
Uncle Milton. All right, you guys go ahead. I'm going to mute myself.
Okay.
So, I'm chiming in here because I'm seeing an example of a trade. I think what you are saying is to buy an Apple call at 110 strike price.
I gave 2 different trades. See this chart in front of you?
Yeah, that's it.
Okay. Wait a minute. Is this the right one? Hold on.
It does say.
That might be on.
Yeah, that's Apple,
Yeah.
Frank. That's my Apple.
Okay,
107.
I'm on the right one. Okay. All right. So yeah, here's what I'm doing for the room. Based off of this trigger, when Apple comes down to 107.01,
Right.
I gave 2 different trades.
Right.
For traders who don't use spreads, for traders who don't understand how to sell options, there's people out there that are bullish on Apple that want to use options that don't use spreads. I said, yes, I'm saying buy I'll bring it up, buy the calls, buy the 110 calls, yes.
Right.
And you have a question on that. Go ahead.
No, so I think it's not really a question. It's more a larger philosophical difference between you and I.
Let's chew on it. Let's chew on it.
I'm not saying either one of us is right or wrong.
No.
But I have followed Apple. I'm not currently in Apple, and everyone knows it has been beaten down for the last 2 weeks from 118 down to where it is now. And today and yesterday, as you know, the market has turned lower for unknown reasons. Perhaps it is post Fed.
Okay, hold on. Time out, Milton. Let me just understand something. Are you questioning our reason for being bullish on Apple, or are you questioning the buying calls?
No. I think the grand scheme of things, the next move for Apple is either to hold this level or to go up. But how a trader would make money, I differ. For example, I would not wait for the Ryan 107.01 trigger. I would sell naked 106 puts expiring next week on Apple. I think it's paying about $1.20 or something.
Okay, let me clarify that. I'm not disagreeing with you. First of all, there's a lot of ways to skin a cat. But I think what you're questioning is the when. You're saying that you would go in and enter it now.
Right now, today, when the market is the sentiment in the market is just so bad right now.
I agree with you. I agree. But again, we're basing this off of Ryan's trigger. You know what I'm saying? But talking one trader to another, what are you kidding me? I'm going to put a calendar spread on Apple this afternoon. Definitely. As soon as I get off the air.
But yeah, I'm going to tell you just now. Your next stop will be Netflix. I'm going to tell you there's a plethora of plays that are available to the trader right now. But I just wanted to focus on Apple. How I would make money on Apple. I would sell the naked put for next week, expiring on Thursday, 106. In the event that I get assigned or that the trade goes against me, I would next week buy put to close, sell put to open again, expiring December 31st.
Okay.
I believe we're at the bottom of Apple. Period. And I do that because I follow Apple for a long time. I've made a lot of money trading the 108 puts earlier this year. So I don't go through the use Ryan's sophisticated methods of charting the prices. I just know.
Hold on. You know what? Hold on. I don't want to have this conversation. We all have different ways as to what makes us bullish or bearish or neutral. Some people use news. Some people use charts. Some people use this. Some people use that. I'm not discussing that. That's not what we're doing right now. Okay. Let's just say we are all bullish on Apple. Well, you're bullish on Apple now. You're going to sell a put. Okay. I'm more neutral on Apple. I'm going to do a calendar with a big range. Okay.
What kind of
I might do that. But I'm saying so we're not questioning, and that's an ongoing conversation. Why do you think it's going up? Well, Ryan thinks it's going up because of what he did, right? You might think it's going up. So why do you think it's going up? Why are you bullish on Apple?
Well, I'm not so sure that I'm sure. I'm not saying I know that Apple will go up. I am saying that Apple will not go down. That's what I'm saying.
See, now that's a true option strategist. We get to have that conversation. We don't have to trade up and down. His trade, he would love for Apple to go up. If he sells the 106 puts, me too. If I sell the 106, 105 spread, we would love for Apple to go up. But we don't need it to go. We don't need it to go up. We don't need it to go up.
The best thing for me is if I'm right, is if Apple trades next week at the same price it is today. What happens? Expire the put, sell put to open again.
All right, I'm going to be a wise guy. I'm going to be a wise guy because, and I practice what I preach.
Yes.
What's the worst thing that can happen to me in my trade? In my vertical spread or the call buyer, the 25-cent calls and my spread, what's the worst thing that can happen? Well, Apple can go from 107 to 90 overnight. Bad news.
Right.
Right. My vertical spread's going to lose $700 on a 10 lot. Right. The call buyer is going to lose $250 on a 10 lot.
Right.
What are you going to lose? What are you going to lose on your naked put?
If it goes to 90 from here, that's about $15,000.
That's my point.
Right.
So that's personal. It's personal preference. You're not wrong. There isn't one single right answer.
Right.
But I'm a deal maker. I'm a deal maker, and selling naked isn't a good enough deal for me. Because if I get a train wreck, I might be out of business. And a lot of new traders who we have in this room, there's a lot of people in here that have not been trading as long as you and I, okay? Right. And those traders, they can't handle a train wreck because they might have 10 grand in the account, and if that one trade blows up, I know you got deep pockets. You're not playing with scared money. But there are traders where if they have one train wreck, they can't trade anymore. They're done. They're out of business. So that's the most important thing. So that's why, and I've had a couple train wrecks early in my career. So that's the way I trade. But there's no single right way. I respect what you're doing. You have a bigger edge than I do. My break-even is higher than yours, right? Your break-even, if you sell those calls naked right now and you held it to expiration, your break-even is going to be 105 and 3 cents. My break-even is going to be 105.70.
The puts right now are selling at 97 cents, right? Is that right? Am I saying that right? No.
Mm-hmm. That's correct. Look at my screen. It's real time. But guys, again, I'm not being a wise guy because Milton and I always have this conversation.
Yes, we do.
This is just a day in a park. But take a look over here, guys. Right. Look at his cash flow on a 10 lot. He's taking in $1,000, but look at his maintenance over here. You know how many option traders do this and they don't even know about maintenance? I know Milton does, absolutely. But Milton, for him to sell these puts on a 10 lot, and I have a feeling he's selling more than 10, but I'll stick with 10.
I would only sell 10 because there's...
Okay. All right, well, if you sell 10, they're locking up $30,000. So really, I don't care what you're risking. They're taking $30,000 out of your pocket to do this trade. Okay? Now watch what happens when I put the spread on. I'm going to add my position. The credit's going to be smaller. Milton took in a whole $1,000. I'm only taking in $250. But there's a big but here. A big but. Look at my maintenance. I'm not tying up 30 grand on this trade.
Right.
Okay? So that's why, Milton, this is the part I'm trying to get you to see. So you make it. So here's the question. You make $1,000 on a $30,000 investment. That's 3% on your money, guy. 3%. If I make 30 cents on my 70-cent investment, that's 42%. 42%. So which trade outperforms the other? And don't take it personal, I'm just pinning the trades against each other. You asked me to clarify why, and why you do what you do, and why I do what I do. For me, that's a no-brainer. And I can't have a train wreck. So the question is, yeah, I know you're making less money, but that's not the whole deal. Do you want to risk 30 to make 30,000 to make 1,000, or how about risking 7,500 to make 3,000?
Well, I don't risk 30,000. There is no money.
Hold on. I said no. I said I don't care what you're risking. That's what you got to pony up to do that trade. If you only got 10,000 in your account, you can't do that trade.
No. What happens is that the brokerage looks into my account, see if I have enough margin to cover the bet.
But it's frozen. It's frozen. You can't withdraw that 30,000, and you can't trade with it. It's locked up. So if you have 100 grand in your account and you do this trade, now you got 70 to trade with. No ifs, ands, or buts.
Frozen money costs me nothing.
But you have to have it to use it. The guy that has 10,000 in his account, he can't do this. You know what I'm saying? You have deep pockets. For you, it's nothing. For you.
What else would I do with this? Is a weekly option. Next Thursday, it goes belly up. Do it again.
You don't need the money. You don't need the money. But if you did, you know what I'm saying? But even because you have deep pockets and you have enough money in your account, a lot of traders don't. And all right, so even though you have a lot of money, why don't you're not utilizing your money to its full advantage? You should be using more contracts then.
No, Frank, I actually looked into that, and it makes more sense for me to just do 10 contracts on Apple. There's many other stocks that that I would want to open up positions that would diversify away from Apple. So in case of a train wreck, which I don't expect to happen, but which can happen, I am protected somewhat. You know something? I can't say that. I have had a train wreck. Yes. But it did over the scheme of things. I managed to dig out of it.
Let me put it in perspective this way. This might help people.
Right.
Let's say and this is not fantasy. I'm 9 out of 10 on trades, especially vertical. Verticals maybe 7 out of 10. Calendars 10 out of 10. 19 out of 20. Whatever. But let's go it this way. Let's say you win 9 trades and you average $1,000 a trade. Okay? This trade right here, your trade. I'll take this off. Here it is. All right? Here it is, $1,000.
Right.
Probably going to win. Has great probability. These are the trades where you go 9 out of 10. No doubt about it, because you have the edge. All right? But here's my point. Let's break it down. All right, so you won 9 trades in a row. You're up 9 grand. And then you have a train wreck. Not even a train wreck. You lose 15 grand. Forget the money for a second or what you're going to do. If you're winning now you got to win 9 more, you got to win 7 more trades just to be up 1,000. That's the work you have to do. I know you can handle it financially, but you won 9 trades, you're up 9 grand, now you lost 15. So now what do you got to do? You got to win 15 more trades to recoup for the train wreck? That's a lot of work, man. I don't want to do that. That's a lot of work to recoup the 15 grand.
It doesn't work that way.
Oh, well, hold on. Let me finish. If I go 9 out of 10 and I win 30 cents, okay, that's $2,700, and then I'm wrong on that last trade, and Apple goes down 20 points overnight. I lost 70 cents. So what is that? My 2,300 is now plus 1.60. I don't have to win 20 more trades to offset what I just lost by Apple going down 20 cents. You can. You just said you're going to diversify, but I don't care where you go or what you do. You got to win 15 more trades at $1,000 a pop to recoup that Apple going down overnight.
It does not work that way.
Tell me how it doesn't work that way.
It doesn't work that way. And the train wrecks typically happen because of bad earnings. It could happen even an analyst downgrade doesn't knock it 20% down.
It probably never happens. I don't want to say never. It usually does not happen, and it should not happen. But like I said, if you trade long enough, it'll find you. It happens. You mean to tell me Apple never dropped big overnight?
It will happen, but it's not 1 in 10. It's 1 in 100. And I'm telling you, Frank, I have experience. I probably put on 1,000, 1,500 option plays a year. Is that
I know you do. I bet you did. I bet you did.
Yeah. Yes. So I can tell you from that source of data, it's not 1 in 10.
You have a large body of work.
I have a large body of work.
A large body of work, and you have so many winning trades that you might be able to absorb 5 or 6 train wrecks and still be profitable. I get it.
But
I get it.
If you pick your fight, that's the whole point. If you pick your fight and you know what the market's doing, these train wrecks don't happen. It's especially now. We're in a very quiet season. The news flows will not happen. There is no pre-announcement of bad earnings. Right now is probably the best time of the year to trade. Early next year, when they close the books and they start pre-announcing bad earnings, that's a bad time.
So you're picking your spots. All I'm saying is, and okay, so that's good. That keeps you out of trouble most of the time. But
yes,
just like football, any given day, it usually don't happen, but any given day, any stock, so any given stock can take a hit. It can happen. It doesn't have to be earnings. It could be a rumor or whatever. I'm just saying. So you've been in more stocks where it has not happened, and your large body of work, obviously you haven't gotten fried, and because of a lot of successful trades, you can handle it.
Most of where my algorithm fails is if I sell puts and holy cow, it goes down. It can happen, right? And usually what happens is that it usually goes down and then stops going down. So you sell puts against that. Again, I work.
Oh, that's how you fix it. That's how you fix it, but you're not fixing it overnight. And you're still down 15.
But given that weekly options, you have the options every week to.
Oh, you can get it back quick. Absolutely.
Right.
Absolutely.
But where I fail, where things go badly against me, is in cases of it goes down, then it continues to go down. Holy cow! That's bad. And I've learned over the years that if you stay with large name stocks, that kind of stuff doesn't happen. If it goes down, it goes down.
I think there's I don't know the right word there. Again, I'm not gonna argue with you, but I'm looking at that. Look on the screen right now.
Right.
There's Apple. It's right in front of us.
Right.
You tell me Apple never went down hard? I look at the chart. It's a small chart, but this is a 1-year daily chart. Look at look here.
And Ryan has it right. It is sitting on long-term support back from January of this year. You see that?
You're talking here. Yeah, I see it.
Yeah, right.
Yeah,
So
and
this number here down in August, that's the August 24th deal. Remember
you're at a good level. You're at a good level. The timing of that's why I like Ryan's trade. The timing of I see this. The timing of it. Yeah.
I'm going to tell you guys, I would sell 106 puts till the cows come home. Walk home with $1,000 a week, and just.
All I'm saying is this, and we can find better charts than this. This isn't bad. Where you can have 8 points of confirmation, where it bounces off of that zone 8 times. Well, football teams win 10 games in a row. They don't win 100 games in a row. It happens. Things break. Things don't always come true. The probability of this thing bouncing off of this level is pretty good. But is it a sure thing? A short thing to take the risk of a train wreck? It's not good enough for me.
I think for a stock like Apple, which is it's a widely held stock, the chances of it holding the 105 level is very, very strong. Very, very strong.
But not a short thing. Not good enough for me. Good enough for me to take the trade. Good enough for me to get bullish, but not good enough for me to take on a train wreck.
Oh, it's way, but it's for me that this is probably the golden deal. We're in a perfect time of the year. Holy cow! Okay. Nothing should happen. It's happening.
Well, they said that when the Giants played the Patriots in the Super Bowl that year. The Patriots were undefeated, right? Yeah. You know, things happen, man. And you know what? I prepare for everything. That's just my style. It's my way. And again, we have a trading room. I'm a teacher. I have people who don't have the body of work that you do, and they have no business selling naked. No business at all.
Yeah, I would say you're right. I also believe that if people have, I've heard people trying to trade options with a $500 portfolio. Not going to happen.
They can't sell options. They can only buy calls and puts. No.
Ed, what you're talking about is what we're really here for, to be honest with you. I mean, if you're trading with $100,000 and you want to sell naked, that's your call. Or if it's not your money to eat with, but a lot of the traders we've trained, they're trying to either do this on the side and eventually do it full time, or they want to do it full time. Some people just decide. But telling anyone to sell naked with a $500 account, $5,000, I think is ridiculous. But if you have a $5,000 account, you might want to really just, if you're listening and you have like a tiny account, let's say below 10 grand, let's say 5, and you don't want to do Forex, you don't want to do futures because you don't want to sit behind a computer, no problem. You know, Frank gives plenty of scenarios just in the last week. This Apple trade that's about to hit, just buying straight calls, or that Facebook option that we did off that 4-hour chart, just buy straight calls in the beginning. Use a little bit of your buying power. Use $500 of your $5,000 account to buy straight calls and build an account, and then you can move to selling. But in the beginning, don't listen to anything we're saying as like selling naked is, you know, the spread's the way to go. I don't really care if you had $1 million, but that's just me.
Let me go one step further just to show you. I don't want anybody to get the wrong idea. I'm not doing these trades because I have new traders in. I'm considering them, okay? But I've also been trading for 25 years, okay? And I've been around the block a few times. I have a lot of experience. I have a large body of work, not just for me, but for the people I trade for, okay? The private hedge funds, et cetera, et cetera. You can give me $1 million right now, and I'll run a hedge fund. I'll trade it. I'm still not selling naked. Give me $10 million. I'm still not selling naked. So that's where I stand on that. Okay. So it's just not me coddling a new trader with a $5,000 account. Give me $1 million. I'm still not selling naked. But that's personal preference. Don't be a puppet. I tell all new traders, take a little piece, make it your own. I'm not a puppet. You shouldn't be a puppet. We all have different ideas. And this is I have this conversation with lots of traders. But again, it's personal preference. But I'm telling you why I don't do it. I'm not saying you're wrong, but for most traders, I think it's the wrong way to go. So much to the point I practice what I preach. I never sell naked. But
you never sell naked?
Never. I mean, I might maybe for 3 minutes. I want to see what I get for the short before I commit to the long, because maybe the liquidity's poor on the option I want to sell. So I want to make sure I get it. So I'll leg in and I'll sell short first. I'll sell a naked call. Immediately after I fill that, I'm buying the hedge. So I'm naked for 3 minutes, 4 minutes. That's it. So again, it's an ongoing conversation. Thanks for sharing. And the next time I see you, we'll have the same conversation. Good. It keeps us sharp, and I'm happy to hear you're doing well. I'm happy about that.
Yeah, I think today is setting up to be a very good trading day.
Oh, it's been it's been great.
I had a really good day so far. I'm not screwing it up. I'm not taking any more day trades. I banked 35 ticks on crude oil. I'm not screwing around. My day is done as far as trading. But if this Apple trade hits, I might buy some calls. So.
Hey, Ryan, you know what? I'm going to go back to you now. Since you're trading oil, I have not. What's your gut on oil over the next week and the next month? You got it. You have a outlook?
All right, so if you want to hear a thesis on it, if price can get, I'm not a breakout trader, but if it can get above 37, and then get above 30, think of it like a stair step is the way my mind's working. If it can get above 37 and stay there, and then clear 37.46, then we can hit 38. So that's what I'm looking at, just from looking at my charts and looking at the space between different levels. That's what I would use to do like long-term analysis for my style of trading.
Okay. You're trading gold. What are you trading? Oil futures?
Oil futures, yeah, CL.
What is it? USO for the ETF?
Yeah, USO.
We don't have to do it now, but in the future, I want to USO. Let's qualify that now, because if you're working again, I like to piggyback on talent. And Ryan, like I said, I haven't had to use any of my risk management on any of his trades because he hasn't been wrong. And I have trades where he can be wrong, and he's been right all the time. So since he's doing very well, in the option world, let's take a look at. I want to look at the liquidity and everything on this.
On USO, sure.
Yes, I'm looking at it now. It's coming up. You got to. Here we go. All right, let's just take a look at the bid ask and the volume. Here we go. Look at the volume, guys. Look at the bid ask spreads, guys and girls. Look at this. That's what I'm getting at, Rye. So yeah. if you're gonna be making money on oil futures, we need to tap in on your observations, because we should be piggybacking on what you're doing and bring it here, option traders. But now this is a $10 underlying, so you could this could be a good covered call, believe it or not. Or verticals and calendars, why put up $5,000
we have people who come, there's two guys, and one bought USO up in the 30s, and he said he's going to ride it into the ground. So if we can when he gets in here, we'll actually look at this, and we'll show him how to sell some covered calls, maybe reduce his cost basis.
Absolutely, will help his loss, no doubt. So he bought the underlying up here at 30ish?
Yeah, somewhere around there, yeah.
Yeah, and see, and Ryan makes a good point. Just think, of course he's staying on it because he wants it to come back up. Well, look how long he's been on it.
Yep.
So think about it. If he would have come to us or knew what to do for income, look at this stretch from mid-April all the way to July. It didn't help. It didn't go up. He could have sold weekly options against this thing for 12 weeks. So let's just do this. Let's look at the 11 calls here. You want to go at the money? No, we'll go a little out of the money. You got 23 cents a week. What did I just say? 12 weeks? There's 2.5 points of income he could have made along the way.
Yep.
Yeah. He's not in the room yet?
No. He will be. He will be.
Yeah, definitely let us know when he's in the room, and we'll definitely cover this. So I won't go deep here, but knowing that you're watching this, I'm going to start looking at the option chain on this, because I love the liquidity. Look at the volume on this thing.
Yeah.
Look at the bid ask spreads.
I mean, just as an aside, Frank, I'm looking at a weekly chart of USO. Very often you look at a weekly chart, you don't see a whole hell of a lot, but I see some short setups around 14 on a weekly chart. And then up at 20. So I mean, we got some opportunities here.
Yeah.
All the way up to 20. If it does, even if he wants to get back to 30, he's got a while to wait, because there's a lot of shit in its way. There's gaps to fill and reverse. This is gonna take a while. Minus any kind of news.
There's a weekly chart on the board now. Not as good as Ryan's chart, but it'll suffice. Yeah, and I know exactly what Ryan's saying. So this guy right now, looking at he's at 10. He needs it to go up 20 points to get even. Well, if he was selling calls against it, maybe he only needs it to go up. The longer he sells the calls, he only needs it to go up 10 points, because he's going to make 10 points in premium, right? Exactly. If he does it for an even longer period, if he does this thing for 2 years, he might not even need it to go past 10. Because if he has 52 weeks of premium coming in, there could be 10 points right there. Do it another year. There's another 10 points. Or I got a better idea. How about doing that when you're even? Instead of trying to absorb a 20-point loss, how about doing it when you're even? And that's the point I was trying to make before with my fellow option strategists that even though you have other winning trades, when I see a 15-point loss, even on my calendar spreads, I might have to win 7 or 8. My next trades, the next 7 or 8 trades I win just covers the deficit on that big hit that I lost. You see what I'm saying?
Mm-hmm.
I want to be in the clear. So I don't want one trade to mess me up. So when I lose 70 cents or $1 on a trade, my next 7 or 8 trades win, it's buried, it's gone, it's off the books. I got it covered. I don't want to have to win 15 more trades just to break even for the week or the month. So that's just me. But yeah, we'll be watching this. I can't wait till he comes in. I'm sure you'll let me know when he's here.
Yeah, I'm going to
we'll
send a special invite with this kind of stuff, and he'll love it.
There's a lot of things we can do for him. You know what else we can do? We can tell him to sell his underlying and just buy a leap, just if he needs the money. You know what I'm saying?
Sure.
But he's being stubborn because you don't want to take the loss.
Yeah.
And that's what I mean about trading with an edge and not losing a lot of money. When you're down 20 points on a trade, right now, as he's going, what does he need to win? He needs this thing to go up 20 points. That's pretty far-fetched. Whereas when you're selling option premium, that is a short thing. I don't need a miracle. I don't need it to go up 20 points. I just need it to expire every week. You know what I'm saying? So that's how I approach it. It helps me trade better. It helps me win, the bottom line. All right, anything else, Rye? Anything else you want to peek at before we shut down?
Well, Apple was heading there. It got as low as 107.13, and our entry was 107.01, and now it's 107.50. Yeah, we actually could have front run that a little bit by 10 cents. I would have done it if I was watching it.
Well, that raises another question and another ongoing conversation. Let me bring your chart back up. I sort of flirt with it. I flirt with it at times. Ryan has a trigger here at 117.01. What do you do when it's at 17.05? Do you dip in quicker? That's personal. Yeah. And that can go either way, right? It can go to 107.05 and you go in and it keeps, and then it goes down all the way through. And you say, oh, shoot, but then again, if it went down, you would have got in here anyway.
Yeah.
The only difference there is if you go in, you'll pay a little bit more at 17.05, and maybe it'll go down to 16. It'll go down to here. What do? You know what I'm saying? So, I mean, I could make a case for going in early. Because how many times, and we might have it happen now, how many times, Rye, you'd be a good one to ask.
Yep.
Definitely. And Mitch, how many times has something gone down to 17.05 and you didn't take it because it's not in your zone yet, right?
Exactly.
It didn't break the condition, and then boom, it goes up to the moon.
Yeah.
Does that happen a lot?
Oh, sure. Yeah. A couple times a week.
It happens. So,
and the point of that with using the call, if this is a straight directional trade, buying long calls, the front running yourself 10 cents isn't going to change the underlying option. If we were buying 45-cent options, what's that going to change at a nickel?
No, you know what? You make a really good point, a good case to get in, because that option, the delta on that option's soft. Here, let's go back to Apple, and it was forget the spread now, but I still might go in early on the spread too. Not early at 75 cents, but down at a dime.
No, I hear you. Spread, yeah.
So bring this back up here, and you make a good point. Let's look at it. We said that we wanted to do the 110 call, okay? So I'm waiting for the prices. The 110 call right now at 107.48 with Apple at 107.48. Come on, man. Come on. It'll come. Still waiting. The point is with the 110 call at 107.10 and 107.01, the option might be 3 or 4 cents different.
No big deal. Yeah.
No big deal, man. You can make a case for going in at 17.20. Because the other thing here is, let me go back to your chart. This is why I love teaching, because you guys make me think about things, and it raises my bar. That's why community is a wonderful thing for traders. I wish I would have done it sooner. Here we go. So here's the point I'm making. Because the option price isn't going to fluctuate so much here at 107.15 compared to 107.01. So what if you did go in at 107.10? And I'll make up the number. You paid 26 cents. And it keeps going down lower, and then it hits the magic area and then goes up. All right, you paid 3 cents more for the option. So what? You still want to be on it. The observation is still in play, right? We think it's going to go up from here. All right, you got in earlier. Now, if you bought the stock earlier, that's a different ball game. Because if you bought it at 107.15 and it went down to 106.90, you just lost 25 cents getting in too early. But the out-of-the-money option, it's only going to, like Ryan said, 3 or 4 cents at the most, 3 or 4 cents. Take it to the vertical spread. The vertical spread, I'm selling puts. I'm actually going to get more the lower it goes. So I might miss maybe a nickel or a dime on that move on the vertical spread. Maybe even less. So, again, it's personal. When Ryan draws a line here, you're going to go in when it touches, you're going to go in when it breaks it, or you're going to go in when it gets close to it. I don't have the answer, but I can make a case for going in earlier. That's personal.
Let me add to what you said there, Frank, of any of my students that are buying straight stocks, right? Or let's just say this was futures. Let's say this was Forex. Doesn't make a difference. You only probably wait to, I don't tell anyone to front run themselves, even though sometimes it's valid depending on the product. If it's the S&P maybe, and you can get shaken, it can turn at a dime, or sometimes you don't get a fill, or sometimes you hit the market button, all that kind of stuff. But majority of the time, they're waiting for the entry. Now you're buying straight calls, like you said. If there's no disadvantage, or if the disadvantage is 2-3 cents, and you're buying a 10 lot, that's $2, $2. Not if you're buying 4 contracts, 5, say, even less. So in the options arena or directional options, like you said, you could do it with verticals too. Then you can front run yourself a little bit. Not a huge deal. Get in the trade. Let it do its thing, all that kind of stuff. But for a stock trader, I'm waiting for them to get in. But let's take it. You're trading options for the edge, right? And for the advantage, one of this is one of those advantages. You can be we can go over those a whole other session, like all the different ways we call it an edge, like we did last time. But that's it.
You said the key word. There's no disadvantage, so it does qualify. It does qualify. And I apologize. What's his name? Milton?
Yes, Milton.
Hopefully he's still in the room. But
yeah, he's still
guys like Milton. Now he said something that's very common for me. He's using a strategy where he's not going to wait for it to go. He made a case, and I agreed with him, because what I'm going to do on this, what I might do on this, you guys all know I do calendar spreads. And another reason why I use calendars is, I don't have to be as fine on my entry. Like Milton, he just said it with his. He said he made a case for going in now. He wants to sell the 106 now. And I'm with him on that. Because of the strategy he's using in the edge, we don't have to get as fine on our entry. We don't want to be sloppy. We don't want to be negligent. But because of the strategy, we don't have to be as fine. So for me to do a calendar on that, I'm going in now, because of the range I have in my profit zone. You see what I'm saying? But back to what Ryan said, if you're buying the underlying, no. You need to stick to the rule there because of what you're trading. And that's okay too, because it's more defined as to when you're going to enter, which is simpler. Right? You don't have a variance as to should I go in here? Should I go in there? No, you drew that line there. That's what it is. You're trading the underlying. You go in at 117.01 or 107.01, whatever it is. Okay. Let me just check one thing here before I get off. See here. Remember yesterday I talked about this PAN-W calendar spread?
Yep.
So when you go into a trade like this, and by the way, Ryan was right again. I did the trade anyway. We were recommending the trade anyway, but I used Ryan for confirmation. I said, what's going to happen first? Can this thing go to 190 or 185 first? Because I was looking for a starting point. I wanted to stay underneath it. I wanted to go with the 185 as my starting strike. But I said to Ryan, I said, is this thing 185 first, or is it going to zip up to 190 and go past it, or can it stay where it is? Ryan said it's probably going to stay where it is, which it did, by the way. Look at all the movement in the market. How much is the Dow up today? Down. A couple hundred points still? I haven't looked. And look at this thing. It's right where Ryan said it was going to be, okay? I'm still waiting for this thing to populate. And I don't know what's dragging here. I want to show you guys why I have room to breathe. And on my entries, I don't have to be as fine. And I'm still waiting for this, and for some reason it's not coming up, and I apologize. But I think you get the point. Plus, I wanted to show that Ryan was right. And he also said that if it goes up to 190, there's a strong level up there, which, there you see it. So I factored that in. Another reason why I started at 185, okay? And so I take that all into consideration, never just about one thing, but all of these pieces make it one thing. Well, a little bit about what Ryan said, what he said about 190, what he said about it staying in a range, which I love for this trade. So I use that information, I use the Vega, I use the implied volatility, all of that, and the option price ratios, et cetera, et cetera. So it's a combination of things, okay? But yeah, back to entry. You're trading the underlying, you're going to use a different set of parameters on when you're going to enter off of this. Not that one. Still trying to find it. I think it's the second one. That's not it.
What are you looking for again?
I got it. I'm looking for the
Apple.
Yeah.
You're looking for the newest Apple 60-minute. I don't keep going.
Here it is. I got it.
Yeah.
I got it. Yeah. That's my weakness. I have a hard time finding things. Okay. So again, just to finalize. So you trade in the underlying. Yeah, there's your line, 107.01. You really need to get close to that because you can't go in at 107.15 because this thing can go down 20 cents from there, and you're already starting out in the hole. But like I said, if you're using a strategy with more forgiveness, like that vertical spread, that had a break even of 105.70, okay? So I can still work. I can enter that a little bit sooner because I have more. I'm not losing money until that thing gets down underneath Ryan's line. So because of that, I can go in earlier. That's my point, okay? But you trade in the underlying, and even the calls. Ryan made a case. If you're buying that call for 25 cents, you too can go in a little bit earlier. I mean, don't come in up here at 108. No, you need to mimic the observation. So, good stuff, man. Anything else? Ryan?
Now that we're about to wrap up, Apple's getting there. 107.27.
Son of a gun.
Yeah. Anyway, real quick, let's wrap up, Frank. But we wanted for Apple, I want to review 110 call, December 25th expiration, and I can't remember what the price of the calls were.
Well, they're close enough now, and if this damn price screen would update for me, I would be able to show it to you. I apologize. I definitely got to call option view because something is. You know what? I got a better idea. Let's do this. Let me use the Thinkorswim. This is what's running in the background of my option view. So let's do this here. How do I close this thing? Let's get this thing out. Hey, hang with me, Ryan. Let's look at the option prices, and we'll clarify, because I was all over the place, and I know you want to finalize. Yeah, 107.21, and we're only looking at these options here, the ones that expire. Like I said, now if you're buying these, remember, they don't expire Friday. They're going to expire Christmas Eve at 1 o'clock. But you won't be on these till Thursday. This is a play for Apple today into Monday. And if we're still on this on Monday, we'll roll out to the following week. But that's not the concern now. We want to know what option we're going to use for now. Here we go. Okay. So the 110 right now, Rye, it's trading for, wow, more than I thought, 52 cents. So let's bring in the 111s. We'll give them a choice on that. You guys can see this, right?
Yeah.
All right, here's a recommendation. Because it is pretty close, it's at 107.12 now. It's 107.07.
Yep.
As far as call buyers, I say go with it. Trigger it now. If anybody wants to buy calls on this, buy the 110 for 50 cents or buy the 111 for 31. Even the 111 will work. So if this thing goes up a point from here on the 111s, you'll make 50%. And notice the same thing with the 50-cent option. If it goes up a point, that's going to go up 23, 25 cents, half a point. I'm sorry, 50% on the trade, not half a point. So either the 110 call or the 111 call on a 1-point move, when you get in, if Apple, you're right, and Apple goes up 1 point, you'll make 50% on your investment. Both strikes, either one. So take your pick. Spend $500 on a 10 lot or $310 on a 111. You know what? I go with the 111. I go with the 111 because down there, if it goes wrong, there's your max loss, 30 cents. And a lot of you were on a 30-cent max loss trading plan anyway. So I'm leaning on the 111 for those of you new retail traders. But if you're saying, oh, I got to use more contracts because I want to make more than $150, either do 20 contracts on a 111 or just do 10 contracts on the 110. Either one will suffice. They'll both return about the same amount of money. Now, if Apple starts shooting up more than a point and keeps going, the 110 will eventually outperform the 111. But you need to get that 1 point right first. So start out with the 111. Okay?
Alrighty, so we're going to buy the 30-cent calls on the 111.
Well, it's triggered, man, because now you're at 106.99. So that's a trigger even for the underlying. Let's watch it.
Yeah. All right, 30-cent calls on the 111 December, and we're going to buy those. All right, I got 2 parameters here. I'm going to do like a weekly wrap-up sometime tonight. I'm going to see what I can get it done. And I'm going to put these 2 parameters in there and the other trades for the week that we kind of looked at. The ones that we were specific on, not everything we looked at, but just this one, DY, the one yesterday on whatever that's ESV, all that kind of stuff.
Or we can jump on it at the open on Monday and see what they did, right? Whatever you want to do.
Yeah. Well, this one's triggering now, and if I'm going to buy it, I want or if anybody else does it.
Sure.
And if this doesn't happen quick, you have no problem holding this over the weekend. I mean, we know what the train wreck is here, 30 cents, right?
That's what allows you to hold it over the weekend, right? So what if you sold naked puts, or you did a vertical, or you bought these calls, and Apple opened down 10 points on Monday? Well, the call buyer is going to make out the best because his max loss is built into the trade.
Yep.
I like it. And don't worry about time decay. You can wrap it around into Monday, and then if it's still out there, let's just say Apple's at 107.50. You still want to be on it because it has more upside. Then we'll talk about rolling that out for the final week. But that option will be good for Monday and Tuesday.
Yeah.
No doubt about it.
It has room, I think, to get to 109 easily, and then 110 would be my where I think it'll struggle. But if we get to 110, no real reason it couldn't get through that. But 110 is where I would get real safe.
And that might happen. It might go to 109 on Tuesday. We still chuck that option and swap it out for a final week and let it go to 110. Take those profits. But I'll be with you guys on the other side of this. I'm just saying for now, don't worry about that option. That option's good until maybe late Monday, Tuesday. But we got to get through today and Monday before we even think about Tuesday. So that option is fine. Don't worry about time decay. Don't worry about a train wreck. And you're in position to make a good return should this baby go up. It's a good trade.
Yeah.
I like it.
Great. All right, let's call it on a high note, and I will update everybody. There's a decent amount of people in here, so I got some work to do, but I will update everybody on how this is looking after the close. Who knows what's going to happen over the weekend, but we like Frank was saying, the train wreck is built in, so we're risk managed.
Yep.
Anything else to add, Frank, before we call it a day?
Excuse me? Yeah, call it a day. Can you do me a favor to stay in the room after you turn everything off so I don't have to call you?
Yeah, no,
right,
fine. Let me end the webinar for everybody, and okay. I will, guys, enjoy the weekend. Milton, thanks for talking in there. That was a good conversation, and we'll talk to you soon, okay? Bye, guys. I'm going to end the webinar for you guys. Hang tight for a second.